Hello and welcome to the Tuesday, January 7th, 2020 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we are talking about a couple of analyst upgrades that boosted Tesla stock during the day today, and then an escalating Iranian conflict, which has caused some turmoil in the after hours. So Tesla stock during the day today was up 3.9% to $469.06, up $17.52. So just to put that in context from where we were just about 7 months ago, back in May, that $17.50 increase that we had today would have represented almost a 10% increase in the stock back at those levels. Just a nice example there of the dramatic impact that compounding can have. Anyway, that 3.9% increase on the day for Tesla compared to the Nasdaq, which was flat on the day, but things did change sharply in the after hours. Tesla finished the after hours session down almost 2.5% to $457.50. So, being down in the after hours session, but still up from where Tesla started the day. This after hours drop was due to the macro environment. Nasdaq futures at that point in time when Tesla closed trading in the after hours session were down 1.8% from where they closed the day. So definitely macro driven. Other stocks were down similarly to Tesla. Apple finished the after hours session down 1.9%, Uber down 3.2%, GM down 1.9%, Ford down 1.8%, and Amazon down 2.3%. So Tesla right in that ballpark. And as many of you are aware, this was driven by the news that Iran carried out a bombing of an airbase in Iraq where US troops, among others, were stationed. So here's what we know so far. CNN is reporting that 13 missiles hit the airbase in Iraq. No US troops have been reported to be killed as of yet. As I'm recording, though, they are still assessing the damages. There were Iraqi troops present as well, and initially there were reported injuries within those Iraqi troops. But the most recent reporting is saying that there may not have actually been any injuries within the Iraqi forces either. The Islamic Revolutionary Guard Corps, which is a branch of the Iranian armed forces, is taking responsibility for this attack, sharing an announcement with the Iranian media, dubbing the attack, quote, Operation Martyr Soleimani, end quote. Of course, after the Iranian General Qasem Soleimani, who was killed in a US airstrike earlier this week. Among other things, the translated announcement says, quote, We warn the great Satan, the vicious and arrogant American regime, that any further malice or mobility and aggression will face more painful and cruel responses. End quote. Additional statements from Iran include from Iranian Foreign Minister Mohammad Javad Zarif, saying, quote, Iran took and concluded proportionate measures in self-defense under Article 51 of UN Charter, targeting base from which cowardly armed attack against our citizens and senior officials were launched. End quote. With Iran's Minister of Telecommunications adding, quote, Get the hell out of our region. Hashtag hard revenge. End quote. On the US's side, the Pentagon said earlier in the evening, quote, As we evaluate the situation and our response, we will take all necessary measures to protect and defend US personnel, partners, and allies in the region. End quote. And despite early reports that Trump was preparing to address the US tonight, he later on tweeted, quote, All is well. Missiles launched from Iran at 2 military bases located in Iraq. Assessment of casualties and damages taking place now. So far, so good. We have the most powerful and well-equipped military anywhere in the world by far. I will be making a statement tomorrow morning. End quote. That brings us up to speed to where we're at now. The other point that I would mention is that the Nasdaq has recovered. Futures now sit down 0.46%, again compared to down 1.8% earlier when the trading for individual stocks closed. Pending what happens in the next 10 hours or so, my expectation would be for Tesla to take part in that recovery during the pre-market tomorrow. Again, if nothing else, escalates. In terms of Tesla, we said earlier this week to expect volatility due to this Iran situation. We're seeing that play out now. Volatility is a great reason for caution, but I don't think it's any reason to panic as of yet. I went back and did some research on the impact of the stock market for major geopolitical events, and I found some really helpful research on that I'll post on Twitter in tandem with this episode. The impact, of course, varies from event to event, but oftentimes from the close of the day the event happened to the actual bottom for that period of time, it ends up being only about a 5% variance. So not really all that significant, again, in most cases, and usually recoveries happen within a month or a month and a half. So obviously caution is warranted in a situation like this where things could have a path to escalation, but while it's something that warrants keeping an eye on, at least as it relates to the markets, it's not something that I'm going to be overly concerned at this point in time. So just for example, and not that this is at all comparable to what we're looking at right now, but just more as an example of if something horrific were to happen, what the market reaction could be under such circumstances. If we look back to 2001 following the September 11th attacks, the market was closed for about a week following those attacks, and when it did finally open up for trading again, the S&P 500 that day ended up about 5% below where it was prior to the attacks. It continued to fall from there and ended up being down about 12% in terms of the absolute low from where it was prior. And then over the course of the next month, it ended up recovering. And within 31 days of the attacks, it ended up regaining levels above the close before the attacks. So again, by no means am I comparing the situation we're at today to that situation, but I still think it's helpful context to have in case something like that were to ever happen again. The other influencing factor here that's worth discussing is oil price. So when the news of this attack first came out, oil prices did spike up to, I think, around 4% of where they had been to close the day, then falling back down to up around 1% or so after things started to normalize for the NASDAQ futures as well. But if things were to escalate and if that were to cause an increase in oil price, as that quick move seemed to suggest an action like that might, people might start to realize that higher oil prices would be a beneficial situation for Tesla, the rest of the market influences notwithstanding. What I mean by that is I don't think that singular factor would offset a significant macro drop. Macro drops pull everything down in most cases, even if that's not necessarily warranted in terms of the fundamentals of an individual business. So while higher oil prices could be beneficial for Tesla, it kind of depends how those prices end up getting higher in the first place, I think. Overall, my thoughts on the topic as it relates to Tesla at least would be to be cautious, but don't panic. In other news today, Tesla did receive 2 analyst upgrades, one from Credit Suisse, who's raised their price target from $200 per share all the way up to $340 per share. So with that price target, they did maintain their underperform rating on the stock, with analyst Dan Levy saying, quote, "Our target price is largely based off our model case, in which we assume, number 1, volume of 1 million units by 2025 with revenue compound annual growth rate of nearly 20%. Number 2, additional operating leverage with OPEX as percent of sales better than other OEMs. Number 3, we apply a 17 times multiple to our 2025 EPS estimate, justified given future growth streams, but still well ahead of average OEM multiple of about 7x. On top of our estimates, we embed upside optionality in our target price to more bullish scenarios. Even with all that, Tesla stock appears rich." End quote. This one's particularly amusing because I feel like he's making the bull case pretty apparent. 1 million units by 2025 is extremely conservative. Here in 2020, Tesla has already started laying the groundwork for more production capacity than that already between Gigafactory Nevada, Gigafactory Shanghai, and Gigafactory Berlin. Those should all add up to at least 1.5 million units much sooner than 2025. Credit Suisse says it would take 1.2 million units in 2025 to justify Tesla's current stock price. So, okay, what about 1.2 million units in 2022 or 2023? I would love to see Credit Suisse's price target based on those much more realistic assumptions. Let's not forget that 5 years ago, which, since we just concluded 2019, would be the conclusion of 2014, Tesla delivered 32,000 cars, not even 32,000 cars that year. As we now well know, 5 years later, Tesla delivered almost 12 times that many vehicles in a single year. 5 years ago, Tesla was just beginning construction of Gigafactory 1. So that added 300,000 units. You've already got Gigafactory Shanghai in production mode, and then you've got Gigafactory Berlin in a similar spot to where Gigafactory 1 was 5 years ago. So you'd almost have to assume slower growth than Tesla already accomplished with Gigafactory 1 to get to only 1 million units by 2025. Obviously, Gigafactory Shanghai has already shown that that will not be the case. It's super clear that these analysts are just backing into unit estimates from either market share or compound annual growth rate, things like that, not actually looking at the plans Tesla has in place for the number of units Tesla actually wants to produce. Maybe Battery and Powertrain Day will help make that a little bit more clear, and maybe this time around with an event like this, Tesla can actually get a little bit more credit for it now that credibility has increased. The other price target increase today was from Argus Research analyst Bill Selesky, who increased his price target on Tesla from $396 per share to $556 per share. In his note to clients, he says, quote, "We are raising our 2020 EPS estimate to $5.96 from $4.40 to reflect improved economies of scale in 2020, production and delivery results, and a better than expected ramp up of vehicles produced at the Shanghai factory in China." End quote. In a rare sighting among analysts, Selesky also mentioned Tesla Energy. I don't have the actual note, but CNBC says, quote, Selesky also said he expects Tesla to see growth in its other segments, like energy generation, end quote. Energy, of course, something that we didn't mention with Credit Suisse. I don't know how they're valuing it, but in any of the reporting on that note, I didn't see it mentioned, nor did I see autonomy mentioned. So both of these businesses with huge potential basically playing the role of footnote for analysts at this point in time. And we're still seeing price targets that are around the level that Tesla is at now. So yeah, I don't think Tesla is overvalued at these levels. That is really it for today, though. As always, thank you for listening. I'd also encourage you to follow me on Twitter at Tesla Podcast. And if you want to support the podcast, you can find details about doing that at patreon.com/Tesla Daily Podcast. Don't forget to subscribe, and I'll see you tomorrow for the Wednesday, January 8th episode of Tesla Daily. Thank you.